Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclicode.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He's speaking to us from Vancouver. Welcome back to the show, Bob.
Yeah, hi, Jim. Good to be with you and with our listeners.
A couple of weeks ago, the stock market had some down days. Were we just addicted to it going up and setting record highs every day and having a little bit of a correction? Because it seemed to me it got way too much attention.
Oh, yeah. No, that was a fabulous rally. Like the S&P. And then you had a group of exceptional stocks called the Magnificent Seven. And then individual stocks that were essentially going straight up. So altogether, it was an incredible burst of speculative enthusiasm, a mania, and it showed up. As I say, the S&P is a pretty good measure, and our technical indicators were all ringing bells and whistles on it. So, and then it took a crack, and then it's kind of hanging all together. But underneath the market, we think it's heading to a substantial hit this fall. If something's going to go wrong, Jim, you know it's usually discovered in the fall. And there are signs that the U.S. economy is weakening from, very robust condition. But you can't label it a recession yet, but the growth by the standard measures have come down. So, but we've got four indicators of the transition from a great financial bubble to the contraction, and we can say that they're tentatively moving to suggest that a contraction is next. And this should become more visible. One of the things is interest rates, Jim. There's the school of thought is that the Fed is going to cut rates and this is going to be wonderful. But if you pay attention to history, you'll realize that Treasury bill market is set by, trillions of transactions around the world. U.S. Treasury, U.S. dollar being the senior currency, and shorter than 1 year U.S. Treasuries as being a very liquid item where folks will park their money. So it's an honest reading on it, and short rates coming down precedes the disaster. For example, in 1929, the 3-month Treasury bill rate got up to about just a little over 5% that June, and then started drifting down. And with the surety that hindsight gives you, you could say that that was a signal that the party was as good as over. Well, we had short rates, the T-bill rates, set a high about 5 or 6 weeks ago, and they have declined about 40 basis points. So it's not huge, but hey, it's the decline. If rates were still going up, I'd say the party's on. But the rates dropping about 40 beeps, it says maybe the party's over. So we'll just watch it. But actually, I came across a quote here that I'm going to read here, and this is here. The mistake that many make is to assume that times have not fundamentally changed. They have changed. We're living in a new era, and Wall Street is simply reflecting this new era. Well, that was an article written by John Moody of Moody's in October 1928, the Atlantic Monthly. And
Bob, I was just going to say, that sounds like something that was written in the late 1920s.
Yeah, it was. The title was "The Coming Global Boom." So he was a year. That was a year before the top. And now, in the economy, usually the stock market peaks maybe 10, 12 months before the peak in the economy. And this is why economists put the S&P 500 into the index of leading indicators. But when you get to great financial parties, they seem to get everywhere in the economy. And so what happens is that the economy turns south with the market very close. Like, for example, in the U.S., in New York in 1873 bubble, the stock market peaked in September, and the economy, and this is done by the National Bureau of Economic Research, they were able to determine the business cycle back actually to 1857 or something like that. But anyways, the NBER says that the best on that boom in the economic side was August, and the recession began. Then you move ahead to 1929, when again New York stocks peaked in September, and the economy then peaked in that October, close enough. So when you're in an era of financial asset inflation, the tendency is for when the stocks roll over and head south, it takes the economy with it. Actually, even the 2007 bubble had a lot of financial asset inflation in it, and the stock market peaked in the middle of October, and the economy then peaked in December. Pretty close. It's definitely not the 10 to 12 month span that usually happens. So, anyways, I think a whole lot of things will be happening here with a weakening stock market after August, and also the discovery that the economy is not doing so well either. Maybe China's in a recession, who knows, but yeah, so those are the things to watch there. And then also, interest rates get pretty complicated in the transition to a contraction. And T-bill, as it rates, as I said, head down. T-bill rates in the senior currency head down, and the Fed will follow with a rate cut. But that's what this theme was, that the street is celebrating a rate cut. But if you look back in history, the short rates go up in the boom, and down in the bust. The worst thing that can happen now is interest rates going down, but the street is intuitive about it and says that everything will be wonderful when the Fed makes the next rate cut. And we've done a nice little chart here, a short span on it, maybe 4 or 5 months. But it's the S&P plotted with the T-bill rate, and we took a section of it where both the S&P and the T-bill rate were plunging hugely at the same time. So be aware of the guys out there who are saying that wonderful things will happen when the Fed makes the rate cut. It's falling rates are a disaster. Mark a disaster. So anyways, so then let's say you got cash type money and you're in certain kinds of deposits, the yield is going to go down. But on the other hand, if you're extended out further in term, maybe a 20-year treasury or corporate, hey, that price can get whipsawed because of liquidity problems. So we've found perhaps a happy portfolio. It'd be 3 to 4 year good grade corporate bonds, so you get some yield. And with them maturing in 3 or 4 years at par, you're not going to get whipsawed by price changes. So, and then for Canadian investors, buying U.S. corporate bonds, you're going to get the kick from the U.S. dollar going up relative to the Canadian. Now, in order to do this, you're going to have to get in touch with a full dealer who has a bond trading desk and can give you a fill without taking too many points off on the trade. So I think it can be done. It takes a bit of work, but then in order to do the right thing, it does take some work. So we like to position, say, maximum 4-year good grade corporate bonds. You'll get a return and the price changes won't kill you. So it's a good place to be. And, that's for most portfolios, because there's some people, fund managers, they're looking after equities, so they have to stay long. So there'll be stories about buying defensive stocks. And all I can say about defensive stocks is that they go down slower than maybe some of the hot sectors, and that's what you got. But there are fund managers there who are compelled to be long equities, and rather than being a full freedom and saying, hey, I don't like the stock market, I'm going to reduce as much as I can. So it's an interesting world out there.
I know we're going to take a look at some headlines that caught your attention, Bob, but I'll get to this one right away. American stock ownership back at all-time highs. Are they setting themselves up for a big loss?
That's just what we're saying. I like the number. The percent ownership, people of their positions, the amount of stocks they're owning is at a record high. Yeah.
And what should those people be doing right now?
What I've been saying.
Yeah.
Lightening up.
Take a look at those good corporate bonds.
Yeah.
What about stocks that pay dividends? I know a lot of the oil companies do that.
Yeah, dividend-paying stocks will suffer from rising interest rates. The yield go up, the price goes down.
And we'll take a look at some of those headlines when Bob Hoye returns, right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Some of the headlines that caught your eye today. Hong Kong's collapsing land sales threaten city's funding model.
Yeah, I tried to look up what their funding model was, but it was complicated. But anyways, their collapsing real estate sales are a problem to the administration of Hong Kong.
Well, I know several years ago, we're probably talking a few decades, Hong Kong had no income tax, and they raised all the money they needed at the racetrack.
I like that one. I didn't know that. That's a good one, yeah.
Yeah. Because a friend of mine was working for ABC television there, and he said, I haven't paid any tax this year. He called the tax office. What do I owe? They said, nothing. How can you? And he asked, how can you afford to do it? People bet $1 million, $2 million a race.
Wow.
They can't all be winners,
right?
Except for the city.
Yeah.
And I thought, oh, that was clever.
Oh, that's interesting. Yep.
Now, maybe the U.S. economy isn't that bad. As Reuters reports, U.S. small business sentiment near 2.5-year high.
Yeah, that's the positive stuff.
U.S. retail sales in July were up 1%. I don't know if July's a big month for retail sales normally.
No. We're talking boom time.
Yeah.
And the boom is so good that it's going to bust. How about that?
Now, a headline that caught my eye, Bob, earlier in the week was Canadian economists say recession may be avoided in Canada because of our mass migration. Over 1 million people over the past year.
Oh, yeah, that's the Trudeau government bringing in potential voters for the Liberal Party. So, they were not following the immigration rules, where so many people come in with certain qualifications, and so that's the problem in too many people, too sudden, and not enough housing for them. So, but Trudeau did the same thing as the Democrats did in the States, only the Democrats brought in about 10 million people in with the hopes that they vote Democrats. So
now, I'm not sure of the number, but out of that 1 million, maybe 400,000 were refugee claimants. So they weren't the usual Canadian immigrants who Canada screened saying we need that particular skill or your potential skill.
Yeah. Well, these days, anybody puts the name, the claim about being a refugee status at times could be suspect.
We had people claiming they were refugees from the U.S.
Oh, that's funny. Yeah.
So you got to put something down on the form.
Yeah.
I didn't like the government. I'm fleeing.
Well, my grandfather immigrated from London, maybe 1905 or 1906 or something like that. He then, of course, went to the Canadian Immigration Office in London and got the papers and the forms and all that sort of stuff. And then one of the officers there said, "Oh, and have you been to Canada before?" And my grandfather said, "No, he hadn't." "Oh," he says, "well, wouldn't it be a good idea if you went to the middle of the country?" And, of course, the middle of the country is Winnipeg, Manitoba, where it gets so cold you can't believe it. So that's how Grandfather Will ended up in Manitoba. Good God.
The great-great-grandfather was a Bobby in London, and as part of their retirement options, they said, you get free homestead land in Canada if you want that.
Yeah.
My grandfather remembered being 5 years old, riding in a Red River cart pulled by an oxen.
Wow, that's a good one. I like that story.
But, all the property your eye can see, that's yours.
Yeah.
Yeah. Headline, U.S. manufacturers hit by soaring property insurance costs.
That's a sneaky one, isn't it?
We're all getting hit.
Costs.
All of us are getting hit with insurance.
Yeah.
Yeah. Well, the U.S., I think, has the worst weather in the world. You're trapped between hot Mexico and the Gulf of Mexico and the Pacific and Atlantic with wet, hot weather. And then you have the cold. They always blame Canada for every blizzard. And then you have Tornado Alley down the middle.
That's, as you mentioned, warm, humid air coming up from the Gulf of Mexico, meeting cold air coming over the mountains and from Canada, and you end up, the Great Plains in the U.S. have more tornadoes and lightning storms than anywhere else. I think so, yeah.
Now, somebody said they can't build a tornado-proof house, but I just saw one being made out of styrofoam with steel meshing around it, and then you throw shotcrete on it. And they said this thing can survive a tornado that's 2.5 times strongest than an F5. So you can build a house.
If you make it with a dome type of roof.
Yes, so it can.
When you got eaves sticking out and chimneys sticking out, brick chimneys sticking out, of course they're going to get whacked. So.
Headline: San Francisco is sinking in bad hotel debt.
Yeah. Well, the crazies ruined downtown San Francisco. Drugs shoot up, defecating in the streets. Just they wouldn't police bad behavior, and they ruined the downtown part, and then that in turn gets property values, and it's a terrible rot that's happened in San Francisco, and I think they're doing a bit of it in Portland too.
Well, Rick Ackerman, friend of the show, frequent appearer on House Street, was just in San Francisco, and he says they're making great efforts in cleaning up the homeless camps. They're putting on free downtown concerts. He said they're doing, making a good try anyway at revitalizing the place, realizing that just letting it go to the junkies wasn't the best idea.
Yeah. Well, I'm pleased to hear that. I have a regard for Rick, and his view on it would be quite straightforward.
Right, and he was a city resident for quite some time, 20 years ago. And, of course, he notices the difference that, it's a totally different vibe because young people now don't go out. They just stay in, look at their computer screens, and order in food. They don't go to bars and nightclubs like they used to.
Yeah.
Now, according to the Wall Street Journal, investors borrowed like crazy during the rally. So these interest rates did not slow them down.
No.
Yeah.
I swear that the speculative activity and borrowing money in your margin account drives rates up. So their own action drives rates up, and they say that's all right. The cost of money, where price increases in the stocks I'm in greater than the interest rates. So that's how they get all leveraged up.
Bob, myself and yourself being what people call seniors, I've got a pretty decent bank account that's paying me pretty decent interest. I don't want interest rates to go down.
No.
I'm making money on the fact that I'm not speculating in risky stuff.
Well, get yourself some 4-year corporates, eh?
Well, I hear this guy's talking about it. It must be good. And all these people, too, say, well, I invested in this. Why? Well, it was on the Internet. Well, of course, nobody lies.
But if you put some into a good grade corporate bond, you have to do, as I said, you got to do some work. Find a bond dealer that will give you a decent price on them, and there you are.
Headline, I like this one. There's just one problem. AI isn't intelligent, and that's a systemic risk. AI ain't that smart.
No, it took a line away from me because for ages I used the term artificial intelligence is when you took a guy with a PhD in economics and made them head of the Fed, and they then became brilliant as chairman of the Fed. So now AI now everybody's talking about it, and it uses all kinds. It's a huge cost to it, electrical costs, and then you've got Bitcoin and cryptos using a huge amount of electricity. And hey, maybe I should do an article on this. Hey, the price of those, if these speculations in cryptos and AIs seriously crash and go down, then the demand for electricity, and due to those strange activities, is going to reduce, and there's going to be a surplus of cheap electrical power around. How about that? Remember where you heard it.
Oh, yeah. Well, if we do things smarter, we won't need... one thing I wonder about building codes, why don't they make everybody, when they put up a new building, put solar on it? Even if it only makes a 10, 15%. Oh, no,
that's far too intrusive.
Is it?
Oh, yeah. I saw a wonderful picture the other day of a huge solar field somewhere in the Great Plains. All these panels on, a couple of feet off the ground and tilted the right way. A hailstorm came through and destroyed it.
Well, they found by putting netting over tanks, you can stop drones from destroying them from above. Maybe you have to do the same thing with your photo.
No, the solar cells and wind power are both inefficient, and the problem is energy density. And you have a huge energy density with nuclear power, and then hydropower and coal power and natural gas power. You have good energy density, but when you're talking about a wind going by at about 20 knots, you haven't got much power there at all. And then the same problem with the sun is what do you do during the day, the nighttime. And then they talk about batteries. They're going to have solar cells powering up batteries, but that is so pricey. So the problem with these they so-called sustainable power, either wind or solar, is that you got to have backup of the real stuff. So I might as well build the real stuff. Natural gas is very efficient for generating electricity, rather than building the intermittent stuff and then having to build the real stuff as backup. So, but then we've been in a crazy world.
Well, there's a lot of hope being put into sodium-ion batteries. That's salt. And I think Toyota is putting a lot of research into that for their electric vehicles. So
yeah, and then they're going on about hydrogen this and hydrogen that, but eventually the craziness will fade, and we'll all go back to practical internal combustion-driven cars. So.
Horses. We'll go back to horses, Bob. What you got there under the hood? 1 horsepower, but I'm telling you, it's a powerful horse.
Yeah.
And our last headline from the Jerusalem Post, smoking is bad, Hamas is worse. The Israeli Defense Force is now dropping cigarettes all over Gaza.
Yeah, cartons of cigarettes. I just thought that was brilliant PR, and it actually is really quite funny. I liked it, and that was the one where I phoned my friends with it and told the story rather than email them the story, because in talking the story you can laugh and enjoy it. So, yeah.
Do you think that was filtered news? or just a smoke screen over. But I could see in Gaza for smokers there would be a shortage of cigarettes due to the war.
Oh yeah,
because
everything has to go through Egypt and tunnels and all kinds of things to get there.
And cigarettes probably aren't considered emergency supplies from the UN.
No, but it was a brilliant plan by the Israelis.
Yeah, now here's how they're torturing the people. They're dropping cigarettes, but there's no matches or lighters.
Yeah.
Bob, always fun chatting with you.
Yeah, Jim, good to be with you, and let's look forward to next week.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. By the way, we're not making fun of the plight of anybody in the Middle East here. It's just we find it pretty ironic that they're dropping cigarettes.
Yeah.
If you have any questions for Bob, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on X @HoweStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at talkdigitalnetwork.com. HowStreet.com Radio is a production of How Street Media Incorporated.